and I took your attention into the actual gap. This is a liquidity void. I know people have referred to these liquidity voids in the past, but there is no liquidity void apart from an actual gap, where there is no volume, no trading, no printing of any price at all. That resides between the low of the weekly candle formed on Monday, August 15th, 2022 for NQM2023 symbol, and in the high of Monday, August 22nd, 2022. Okay, and those respective price levels are going to be a high of 13,480.75 and that low of that volume, I'm sorry, that liquidity void, it's an actual gap, 13,453 even. Okay, so to the goober that said that 13,453 wouldn't be hit this week, it was, and so did 13,480 and 3/4. And I love how these folks have selective hearing. Okay, my focus for the upside was primarily on one specific market, and that was the NQ. You can go back to look at the tweets, and the weakness or any kind of shorts would have been on the S&P or ESM2023. Okay, I called out the levels in advance, told you what we were looking for, and if you put those on your chart and post the tweets as well, marking when and where I said it, you can see the major intermediate terms swings in the marketplace occurred right at those levels. Okay, so I'll go through them briefly here in my discussion, and I'll tell you what that might mean for ES going forward for this week. So with those levels in mind, having 13,480.75 and 13,453.00 on your chart for the weekly. Now drop down into the daily. You can get that by hitting the number 1 and the letter D, and that will take you into your daily chart. And those levels you can see pretty much repelled price on Friday. We went to consequent encroachment of that gap on Thursday. Notice that it went right between those two levels, 13,480.75 and 13,453 even. Okay, Thursday's price high came right up into a high of 13,470.25. So that's very nice to see that. That's a signature you want to see. Is it respecting that level? And then Friday, we opened, rallied up to it, had a little bit of a mohawk above the high that we would be looking for that gap on the weekly chart. And if you look at the tweets, I shared that gap with a blue rectangle in a tweet. So go back and look at I didn't do too many tweets this week, so it should be easy for you to find it. I also started the analysis off this week telling you that I was looking for and was interested in that gap as a draw up. My concern was the CPI. Obviously, CPI can be murder to us as traders. If we're offside, that means we're not on the right side of the marketplace when it's released. It can run you over and tear your face right off. So you don't want to be positioned ahead of CPI for that very reason. So I mentioned on the daily chart for NQ, I favored the upside. Okay, so that way we know bias was, for me, sharing it with you publicly, I wanted to see it go higher. Admittedly, for CPI, I don't want to tell you what to do because I don't want you to get hurt if I'm wrong. And traditionally, I'm wrong. It just so happens that I was right this time, but for transparency purposes, the majority of times on the CPI number, I'm not all that accurate because it is what it is. So if I wasn't, I'd be trading all the time. So that there would be something else I would give you a model around it. But I've not been able to frame a model that is consistent ahead of CPI. Okay, so I stick with telling you, gun to my head, this is the side of the marketplace I'm looking for. Even though I may say, look, if it's going to go down, it's going to go for this particular sell side. If it's going to go up, it's going to go for this particular buy side. Now, if you're a goober and you're listening to that and you stop right there and you take a sound bite of that and put it on the internet and say, look at this, ICT does, calls it high and low. Keep listening, because I always say, gun to my head, I favor one side or the other. I did that this week again, like I always do. And I was framing it on the context of that daily candle on, now you should be on TradingView, NASDAQ symbol NQM2023 on the daily chart. Put your mouse over and hover over the candle for Friday, May 5th, 2023. Okay, so that particular day, that is your fair value gap on the daily chart for NQ, which is below the gap that had not been traded to and through. Notice that the high on that particular candle fell short of that 13,453 even. Okay, so it didn't do anything on that day. That's the day the goober said, you said it was going to go to 13,453 and it tanked. It's an objective. Okay, you have to wait for time and price to offer the setups. The fair value gap, we dropped down into that day, basically consequent encroachment, which is the midpoint between the low of candle, the daily candle of May 8th, 2023, and the high of the candle on May 4th, 2023. So those two respective candles, you should shade that with a rectangle, extend it to the right. And the market rallied up, just fell short of the 13,453. And then the Thursday, we had a trade up into the consequent encroachment, which is the midpoint between 13,480.75 and 13,453, respectively, in deference to that weekly gap I mentioned. And then on Friday, we opened, rallied up into it, through it, and then gave up the ghost and went back down into the order block that's formed on May 9th, 2023 on your daily chart, that down close candle. With these levels in mind, and if you shaded that fair value gap with a rectangle on May 5th on the daily chart, you're prepared to drop down into the hourly chart with me. So let's do that now. Type in 60 and hit enter, and your chart should drop down into an hourly chart. So you should be showing at least the price action from the 10th, where it creates the low at 4 a.m. on Wednesday, rated essentially the consequent encroachment of that daily fair value gap I mentioned this week. Before it was a factor, I said, I'm favoring that one. I'm interested in this area here. And my draw was to the upside, and where specifically that weekly gap. Okay, so those levels were shared with you. You knew about them in advance. I told you my bias. I told you what I'd be looking for. And I did some executions, and you guys, you had an opportunity to see that. So on Wednesday, the market did, in fact, rally up. And then we had that huge rally up at 8 a.m. to 8:30. So we had news driver come out. It came up, just fell short of, what is that high? 13,433.75. That candle is the 10 a.m. on Wednesday on the hourly chart for NASDAQ. And then we dropped all the way down into a repricing to the candles high of 7 a.m. on Wednesday on the hourly chart. So all that buy side and balance, sell side efficiency on the 8 a.m. hourly candle for NQ. We repriced back down to that, but notice the bodies. Okay, look at the bodies on the 1 p.m. and the 2 p.m. candle on Wednesday on the hourly chart. The wicks do the damage, but the bodies tell the story. Okay, so if you read this, yeah, we reached down into that buy side and balance, sell side efficiency. We also tapped into, rebooked to the order block that's on the 3 a.m. candle on Wednesday. See that big down black candle? Well, my candles are black when they're down, but that's your bullish order block. So we had a fair value gap on the 8 a.m. candle, New York local time, and a bullish order block at 3 a.m. We repriced down to it, and the bodies themselves did what? Stayed at the current new week opening gap high and low, right inside that range. And more specifically, the 1 hour candle at 1 p.m. on Wednesday and the opening price on the 2 p.m. candle on Wednesday, May 10th. Both of those candles' bodies were right at current new week opening gap low, which would be last week's new week opening gap. Then the market rallied up, traded up into on 8 a.m. And you might want to be paying attention to these specific times, by the way. 8 a.m. on Thursday, May 11th, we went up to consequent encroachment, which was 13,466.75. You should have that noted. That's the midpoint between 13,480.75 and 13,453, which is that weekly gap I mentioned in tweets. So we went up to that midpoint of that, which is consequent encroachment, stopped dead in its tracks, went down, repriced into the fair value gap and bullish order block. The bullish order block is the two consecutive down close candles on Wednesday, May 10th, at 12 noon to 1 p.m. And the fair value gap forms on the 2 p.m. candle, which is a buy side imbalance. So it's on efficiency. It's that big up close green candle. We traded down into consequent encroachment of that. And that price level for consequent encroachment for that range comes in at 13,364. Excuse me. Was that 0.75? Yeah. The low comes in at 13,361 and a half on the 10 a.m. Thursday candle. So it went just below a little bit and ride back up to consequent encroachment of the weekly gap, and then pumped right on through it, just above a little bit on the 9 p.m. candle on Thursday, hugged, traded around between that gap high on the weekly chart and consequent encroachment of the gap. And finally on Friday, it gave up the ghost one more time, sweeping through the high of it and breaking down and trading all the way back down to a completely random current new week opening gap low. And your current new week opening gap low for NASDAQ should be 13,310.50, which just happens to be the Friday low of the day to the tick, not one short, not one over, right to the tick, formed exactly at 2 p.m. So my question to you is, we were only bullish on what market? NASDAQ. Okay. I mentioned that if you were looking at both of those indices, if you're looking at SPOOS, which is ES, it was unable to make higher highs and able to make lower lows when NASDAQ wasn't. Okay. So in your journal, you want to have, when you're looking at relative strength, not the indicator, relative strength analysis, looking for the weaker versus the stronger or stronger versus the weaker, you want to be looking for longs in the market that's showing you it's willing to go higher when the other ones aren't, and unwilling to go lower when others aren't. Either one of those scenarios, and I'll say it again, if a market is willing to go higher when other markets are not, and not just any other market, but closely correlated markets. So what are we referring to when we're talking about indices? We're talking about S&P 500, NASDAQ 100, and the Dow 30. So I don't care about Russell. Okay, I don't care about all those other garbage indices. You only need 3 to watch these markets, and you're going to use them comparatively. So a indice that is making higher highs or not, and I'm not saying it in the sense of a trend. Don't think it's limited to just that. Yes, it's true, but I'm not looking at it from the basis of trend. I'm looking at it on the basis of market structure and liquidity and relative strength analysis. So if I'm looking at a market that's bullish, or I deem bullish, I want to see that market perform to the upside faster than the other indices. That's the one I want to be buying because it's breaking out the higher highs before or over the unwillingness of the other indices. That is not always the case that would create a bearish scenario for SMT. And that's why I'm telling you, when people watch me do this, or they'll watch a video where I'm starting to introduce a concept like the Six Sister concept, someone that's just vaguely introduced to some of my things or learned it from somebody else or whatever, it's watered down, they have no idea what they're doing. You think you have an understanding and you don't. And you think that it's a revamping of SMT. It's not. Okay. It's very similar to the idea when I'm talking about order blocks or fair value gaps. If I have a rectangle on my chart, right away, the average person on the internet says, well, it's supply and demand because look, he's drawing rectangles on the chart. That's not the same. So the logic behind what I'm saying is I want to be focusing on a specific market that I would be willing to go long. That market should be willing to make higher highs faster or before the other indices that are closely correlated to it. If it was used for Forex, and yes, this does work on Forex. So don't think that, oh, ICT is just talking about these futures contracts, and I don't trade futures, so it's making me angry. I wish he'd start talking about Forex. I'm talking about markets. I'm talking about price delivery. I'm talking about algorithmic price delivery. So it's the same thing. I'm not willing to trade Forex. So because I'm trading futures, and specifically index futures, I'm teaching you the concept with the real market. I'm not talking about something after the fact. I'm not showing you a hindsight cherry pick thing. I'm telling you these things in advance, and you're watching them form in your chart. That's mentoring. Okay, I'm showing you before the fact. Even when I'm uncertain because of a CPI number, I still tell you what I favor. I'm telling you what market I want to favor when I'm going long. NQ is stronger because ES is weaker than NQ. So from an algorithmic stance, okay, if you were taking that logic or that data, you would say, okay, I want to trade. So where's the trade form? Well, I want to be long because NQ has a gap. And if NQ has the gap and it's willing to make higher highs when S&P is not, and we'll get to that in a moment, and the Dow is unwilling to make the higher highs. So right away, we've already figured it out. We've singled out, we've put the highlight on what market, NQ. What do we want to do with that market? We want to buy it. We don't want to sell it until it gets to the end of the weekly range. When can that form? Thursday and or Friday. And we'll get to that too in this discussion. So I don't want to be going long on ES, and I don't want to be going long on Dow. Now, that doesn't mean that there won't be a little bit of a spillover, okay, or a little bit of sympathy move. If there is a strong move to the upside with NQ, it might pull up the other indices, but not as much as NQ will go up. And in hindsight, I can talk with this now because I told you in advance it was going to be like this. Look at your chart. NQ outperformed to the upside. Dow and ES were lethargic. They were not willing to go up there. So my six sister concept is multifaceted. So you can't just run along and watch somebody put something on YouTube thinking they know what I'm doing. You have no idea what I'm doing. There's different approaches to using the six sister concept. There's times when using it with you and your present understanding of SMT, yes. That's one facet of SMT, but I'm teaching you a more advanced version of it where you can see like an x-ray view behind price where you should be focusing. For instance, if you're watching several Forex pairs, okay, you're watching Forex and maybe you're looking at the pound dollar versus the euro dollar, okay, and you want to know which one to be trading. Sometimes the euro is a better buy or a better short than cable. Even though cable can be exaggerated, cable's pound dollar, by the way. Just because the pound dollar can be a little bit more animated in the same way that NQ is more animated than ES traditionally. It's a little bit faster market. So that's a characteristic that you need to be aware of. So if you have a market environment that is showing you, for instance, if the pound dollar is willing to make higher highs, when the dollar is either going sideways or wanting to go lower, but the euro is unwilling to make a higher high, which one do you want to be buying? Now, if you've watched last week or so where I started introducing the six sister concept, you would think, okay, well, it's going to be the euro because it has to keep up with what the pound did. No. It's not that cut and dry. You have to learn more logic. I'm showing you and then I'm teaching you. So that way I'm showing you the concepts, what I used. I'm calling the levels beforehand. I'm telling you what I think is going to happen. I'm telling you what to look for in your chart, and your charts are printing off of those key swing points after I say them. So that way I'm teaching you to trust what I'm saying. So that way it's not just simply me talk about something that is very complicated, because this is complicated. It is complicated. It's not easy. It's not a one-trick pony video. I don't even know this. The folks that have been with me since 2016, they don't know this. They're learning it right alongside you, and there's no advantage for them in this specific concept. They have no idea where I'm going with it. You don't know it either. I don't care how long you've been with me. I'm not trying to talk down to you, but you're trying to put things out into the community that it's incomplete. You have no idea what I'm talking about. You have no idea where I'm going with the information, and you have no idea what to do with it. So when I sit down, I tell you which market I'm favoring. I'm factoring in the willingness of the market itself to behave a specific way. That's market profiling. That's not market profile. Okay. I'm not talking about volume overlaid on a chart on a horizontal basis. Okay. I'm not talking about that. I'm not talking about VWAP and, all this other stuff. I'm talking about reading pure naked price action, relative strength analysis. That relative strength analysis yields the six sister concept. When the specifics are in motion, when they're in play, when things are as they should be based on my analysis, and which will be future your analysis when you can do this independent of me, which is the goal. You don't want to be toggled to or not toggled, but tethered to me as a mentor. Like I have to constantly keep giving you breadcrumbs. At the end of this year, you're not going to need me for that, which is exactly where you want to be. It might be scary for some of you, but this is what you really want. You don't want to be relying on me or anybody else. You don't want to be buying someone's service, no one else's signals, none of that stuff. You want to be independent of yourself from everyone else. You don't want to be doing anything that relies on anyone else's input, and you want to trust what you know, you know. But this idea of focusing on longs, you want to be looking at a market that's willing to already show its strength to go higher and look back in recent price action. There should be indications in price action that shows you that it was unwilling to go lower on a specific swing or a number of candles in the past, where a closely correlated market, in deference to the indices as we're talking about here, NQ was not willing. It was not willing to make lower lows when ES and Dow was. Where does that occur? Well, if you look at the NQ toggle to ES, all you have to do is on TradingView type in the letter ESM 2023. Everything will stay the same, and it'll just go right to ES. And you'll see that on the ES, comparatively and respectively, there was a lower low at 1 p.m. on ES, AM on ES. But go back to NQ. NQM 2023 on your hour, that was a classic SMT divergence. So what was it indicating there? It was willing to show you that if you were following what I gave you this week, looking for that daily fair value gap that should be shaded on your hourly chart, where it dug down into that at 4 a.m. on Wednesday, May 10th, 2023. It was willing to go higher. Look at your ES. So ES M2023. On Thursday, ES failed to make a higher high than that of the high on May 10th at 9 a.m. So ES failed. It fell to the idea that I shared with it on Twitter. I said ES is weaker than NQ. Now, if I'm telling you one's weaker than the other, I'm indicating to you that if you are trying to trade intraday price action and you're just trading the intraday volatility, you're not really trying to worry about big runs, which is really where we're at right now. You know, we still have not left this daily range where it gives this higher degree of swing trading probability, where it can move and move in like weeks in the same direction. We're not in that. So I don't know when we're going to leave that, but we have to trade accordingly. Does it mean we can't trade at all? Absolutely not. It just means you have to adapt. You have to adapt. I got down here, started sweating my ass off because I'm not used to this kind of heat. I'm used to being up north. So I got to shed some clothing. I'm running around here with shorts and flip-flops with no shirt on. So no shoes, no shirt. But now we're talking new week opening gap. My mind was not on the half the day of Thursday. So I think around 1 o'clock or so on Thursday was the last time I peaked at price. And I want to see how we performed. And true to form, NQ was the relative strength leader to the upside. And the shorts were better served on ES until, here's the caveat, until that weekly gap was delivered on NQ. So NASDAQ, once it goes, let's go back to your chart on NQ, M2023, that's your symbol for TradingView. You should be on the hourly chart still, Look how on Friday, we stayed inside that new week, I'm sorry, that weekly gap between 13,480 and 3/4 or 0.75 and the low of 13,453 even. Look at all the consolidation around that between the 6 p.m. Thursday candle all the way to a move at 9 a.m. on Friday where we broke lower. And he came back and touched it on the candle at 10 a.m. So he opened at 10 a.m.'s candle on NQ or NASDAQ, opened on that hourly candle and traded right back up to that gap low right there at the 10 a.m. on Friday, 1 hour candle. That movement, okay, There's several things here, and the apt pupil will take this and write it down with a great deal of excitement to go through price action and see this does in fact repeat. It's not just a one-trick pony. This in itself is a model, folks. Okay, I've mentioned this many times in teaching. Every time I brought in a new membership group of my private mentorship, which is no longer there, I'm teaching publicly. Okay, so stop asking me. You don't need to pay me. Okay, I'm teaching you things until November, and then I'm going away. I'm going back to my personal life. Okay, but I have 81 very specific PD arrays. Okay, I'm not going to teach all of them to you, but one of them I've made mention in public, and I've taught it in my private mentorship, the immediate rebalance. Okay, if you look at how, for instance, look at your NQ chart, NQM2023, hover over top of the Wednesday, May 10th, 2023 candle on NQ, your hourly chart. It should show that it's 2 p.m. if you're set to New York local time, which is how you should have your TradingView chart set. So that way you can follow me. And it's also how the algorithm runs. So everything's booked and priced on New York time. I don't care where you are, who's told you different. It is what it is. Okay, this is it. So that bullish candle, that buy side imbalance, sell side inefficiency, that is a fair value gap. It does not completely get repriced to the low, which is the high of the candle at 1 p.m. on May 10th of 2023, when we drop down on the candle on Thursday, May 11th, 2023. Okay, that 10 a.m. candle, we'd made that low of 13,361 and a half. It did not completely trade down to the low of the fair value gap. So it left some of that open. That fair value gap is a draw when price is above it, and it seeks discount. If you go back to that candle at Friday, May 12th of 2023 at 10 a.m., that candle opens at 13,445.00. Notice that? If you're hovering over top of it, looking upper left-hand corner, midpoint of your chart, and you'll see the opening price, 13,445.00. Then the high forms at 13,454.75. That repricing, okay, that repricing is doing two things. Two specific things are occurring there. It's repricing back to a low of importance. What low would that be? Hover over top of the 8 a.m. on Friday, May 12th, 2023. Okay, so that low comes in at 13,453.75. Now that 0.75 is like creating the opportunity for a mohawk. Okay, a mohawk is where the price action just goes just a little bit past a very specific level. And when you're trading, we look for very specific things in precision, yes. But there's always going to have to be this gray area, which is what I taught in Forex, where it's usually 3 to 5 pips. Okay, so because there's different brokerage firms and brokers are using different liquidity pools and their own in-house liquidity pools when you're trading Forex, there is no centralized exchange. There's no, everybody has the same price. That creates an opportunity, like in the beginning, when Forex became a thing where it was opened up to the public, it was the wild, wild west. I mean, brokers were getting away with murder, stealing and robbing people, okay? And it's gotten way, way better, but there's still this disadvantage in terms of in-house liquidity versus centralized liquidity, where everybody sees this candle at Friday, May 12th, 2023 at 8 a.m. Every single trader, every living soul that wants to handle the NQ on delivery contract June of 2023, we all agree that that high is the same high price. We can see that. It's there. We can see that. That's an advantage over futures, over Forex, over crypto, over whatever.